product as a nation. We should have too many things to export rather than importing all that we are bringing in.
With non-oil exports growing steadily, Nigeria is edging closer to a more balanced and diversified economy. But the task is for both the government and private sector to keep working hand in hand to turn these gains into a lasting success. Uloma Oyemachi, TVC News, Abuja.
Now, according to the executive summary of findings in the survey for manufacturing sector by the Manufacturers Association of Nigeria, the global economy has been resilient in its first half of the year 2024, with major economies avoiding a severe downturn, bringing down inflation without increasing unemployment. However, the lingering impact of high interest rates, debt sustainability challenges, continuing geopolitical tensions, and ever-worsening climate risk continue to pose challenges to growth and threatening decades of development gains, especially for developing and small islands and developing states. The increasing climate shock and continue to pose additional challenges to the global economy, threatening decades of economic growth, especially for least developing countries and small islands in developing states. Now, let's look at the improved performance of notable economies like the United States, several large developing economies, particularly India and Brazil. However, the economic outlook for many African countries are deteriorated because of high inflation, elevated borrowing costs, persistent exchange rate pressures, and the lingering political instability. Geopolitical tensions are particularly affected the economic outlook of a few landlocked development countries due to their dependence on neighboring transit countries to access international trade routes. The Director General of the Manufacturers Association of Nigeria, Mr. Segun Ajayi-Kadri, joins me via Zoom to continue this conversation. Thank you so much, DG. We appreciate your time. We appreciate this. Thank you.
Thank you very much for having me, Tolu. It's always a pleasure.
Well, I think it's good to start with the overall review of this executive summary of activities in the manufacturing space. The last we spoke about, I'm still seeing most of these issues still being highlighted here. High interest rates, lending costs, forex issues, power supply. These issues are becoming just recurrent issues, and we keep talking more about them. Tell us what the situation is at the moment, DG.
Okay, again, thank you. I think those issues have remained our talking point because even though attempts are being made to address them in the overall effort to improve on the economy, the actions that we have taken are yet to ameliorate those challenges. As you are very much aware, the CBN has continued to see the wisdom in continuously increasing the interest rate, obviously because of the excess liquidity in the market. We have also continued to see the Naira not gaining appreciably in terms of value. And we have also seen the general environment where the average Nigerian does not have the required disposable income to be able to make purchases because generally costs are high. It must be noted, however, that government efforts are on to ameliorate these challenges, but they are yet to bear fruit. And probably there is need for us to be able to take a step back and review those measures that have been taken by government to address those issues. The situation with the manufacturing sector, as you have rightly alluded to, in the half-yearly economic review that we published, shows that the sector is still heavily challenged and will require immediate action by government to be able to put the sector away from a possible recession to the growth pathways that will benefit the overall economy. And what is needed at this time, not only to reflate the economy, but to record the inclusive growth that this administration has indicated that it is committed to, and also to ensure that we are able to see the benefits of the reform measures, that necessary reform measures, I must say, that have been taken by this government.
good start to this review of this, of course, this executive summary that I've been reading all through all the while. Now, let's look at real manufacturing, the manufacturing sector itself. The issue of low purchasing power, many says, has led to shops and stores or manufacturing hubs having kind of backlog. People are not selling as much as they should sell. In some cases because the prices are high, in some cases because the demand is low. So how are manufacturers trying to manage this? And we're moving towards the festive seasons where there should be more production so that they could meet up with demand. Is that happening also in the space?
Yeah, so we have entered into November, and about 2 weeks or so from now, we'll see the end of November, and we'll already get to the peak period. What we have seen, and is indicated in the report, is that we now have about 1.24 trillion naira worth of unsold inventory. Now, what this means is that many manufacturers have their warehouses filled with products. And what to do that, you have to freeze further production. I mean, otherwise, you may even start to have to rent warehouses to keep those products. And like rightly identified, is because one, the average Nigerian has had a declining disposable income because a lot of people are now preferring to focus only on survival. So you need to make arrangements for feeding, for transport, for electricity, all of which have gone up. So the propensity to make other purchases has become low. Now, this is probably a necessary phase in a reform period. But what needed to be done is to see how we can quickly support a sector that has the capacity to bring costs lower so that we'll be able to have more purchases. I mean, so far, the efforts of government in this direction has not fully materialized. So there's need for us to consistently work at it. Manufacturing is not just about producing an item. It is about selling it. So the right description of a manufacturer is actually somebody who markets a product. Because at the end of the day, manufacturing is a major part, but it's not the most important one. What is most important is for you to be able to take those goods into the market, for you to be able to compete against similar products, and for you to be able to sell and sell at a reasonable period of time that will allow you to be able to do further production, to be able to have replacement costs, and for you to be able to survive on a sustainable basis. So when that is lacking, as we have seen, I mean, to a staggering figure of 1.2 trillion, it is difficult for you to plan for the future. So we are looking at the festive period with a lot of mixed reaction, and we needed money in people's pockets to be able to make those vital purchases.
Digi, let's take a step forward and look at raw material sourcing, backward integration. We've been talking about this, but we seem not to really get to that level where we are so much taking advantage of what we have in-house. What is your take with regards to that, and how is that also fueling prices? Because many will tell you what we go through to import, we have to definitely put it on our customers. We have to get our monies back. Most of these monies are borrowed monies.
Yeah, so within the first half of this year, we have noticed a slight improvement or increase in the local sourcing of raw materials.
Good.
And of course, you know, we normally look at these things in terms of the value. So in the real sense of it, there might not have been any noticeable increase. It might just be due to the higher cost that you have to pay for it. But more importantly, I think that local sourcing of raw materials is what man has actively pursued, and our members are keen into backward integration initiatives for them to be able to reduce their reliance on forex to import those raw materials. But we have critical ones, for instance, that local adequacy is lacking. And so for you to be able to maintain continuously your production, you needed to be able to import. So, and the fact that we have high incidence of insecurity in some places, it has continued to limit even the capacity of those who are backward integrated to source their raw material. But it is comforting that we have not noticed any decline, and that the activities of some of our members that can backward integrate are being supported by government. We continue to partner with government, be able to expand that portfolio. Incidentally, I just got off a highly interactive session that I had with the DG of Raw Material Research and Development Council, where we are looking at ways of improving local sourcing of raw materials. And we actually highlighted the research they have done on Sobitex, on what was that other one now? On TAP, and another one on pharmaceutical grades. So we are daily improving and innovating on how we can increase the stock of our local sourcing of raw material. Enlightened self-interest dictates that, but we have now also recognized the need that we need to create an industry around that area where you will have people, you wouldn't have a situation where a manufacturer will now turn to a farmer who has to backward integrate completely to be able to source. So we can create an industry around it where we are able to offtake. And for us to also ensure that we do not incentivize export of raw products, unprocessed products. I think right now in the National Assembly, there is a bill that is going to require that there must be 30% value addition for you to be able to export any industrial raw materials. It is very, very important that we intentionally incentivize activities in those areas so that we can increase our stock of local sourcing and reduce our dependency on forex to be able to run our industry.
Let's take it to electricity supply and alternative sources. Manufacturers are also spending a lot in this space now that we have the Band A thing and all of that. So how has this also affected or impacted production?
Well, you know, unfortunately for us, we have not made appreciable progress in that. But I must say that even though there's been a slight improvement in power supply, that has also been almost offset by the fact that we've had quite a number of grid collapse. Of course, I must say that some of them are based on vandalism and the activities of some scrupulous and non-patriotic Nigerians that should be stopped anyway. But we have seen an escalation in price of the cost of electricity by more than 230 or 250%. And this has put it beyond many manufacturers. So what has happened is that many of them had cut back on production time. In any case, nobody is really, not much is being bought. So we have seen a cutback on people who are running ships in order to be able to reduce costs. We have also seen a lot of an increase in cost of electricity. I think it's something in the region of us now spending more than 230 billion on alternative source of energy. So you would imagine that a manufacturer is having to spend so much and is having to endure only about 11 hours of supply each day, and is having to pay so much more. So we are seeing a situation where the supply of energy has not supported the competitiveness of manufacturing in Nigeria.
All right, there we'll still be connecting with the Director General of Manufacturers Association of Nigeria. DG, if you're back with us, Let's look at the continuous tightening of interest rates that we've seen at the central bank in recent times. The monetary policy has continued to tighten, and all of this is to rein in on inflation. We know that, but many will say that it seems not to be working. Now, what's the impact of this directly for actors in the real sector? All right, DJ, are you there now?
Yes, I'm there. So sorry for that glitch. I don't know what happened.
No.
So what I was saying.
Okay, go ahead. Go ahead, DG.
Yeah, so what I was saying is that there is need for us to be able to reach an agreement that allows the survival of the manufacturing sector and the supply of this very, very critical input in terms of power. Most manufacturers, their cost structure in terms of energy is between 30 to 40%. And when the cost is so high, you will obviously not be able to compete. We had given an indication that there is need for us to address this challenge. In most developed economies that have industrial sector that is performing, there is a special consideration for power. And I believe that Nigeria must come to terms with that so that we recognize and put our money where our mouth is. There is no way you can have an improved economy that does not have a viral manufacturing sector. And those perennial challenges that have continued to limit its performance must be addressed. So we should look forward to a time where we continuously work with government for us to be able to bring those realities on board and translate them into policies that are very, very supportive. I mean, the fact that there has not been adequate investment in power infrastructure has continued to limit the supply. And I believe it's also why we are having some of these collapses. And the manufacturing sector is obviously the highest paying segment in terms of the cost recovery of whatever that the discos, for instance, may have. So there's need for us to be able to have a conversation that supports the survival of both. Because at the end of the day, with these increases, the monies that are being expected, they will not be able to receive it because we are cutting down on production time, because those ones that we have produced, we cannot sell. And because of the unreliability of supply, the quality of it, you are having a situation where people will even prefer for the short period that they produce to rely on alternative energy so that they can be sure that their machines are safe, they won't suffer any sudden drop in supply of power or in the quality of power or the adequacy of it, and then move on with their businesses. So there has to be a win-win arrangement that takes care of that very, very critical segment of our cost structure.
Now, we have this challenge. Yesterday, I was speaking to the Director General of NECA, who was also talking about companies leaving the country, the likes of GSK and what we've seen in recent times. But my question to you would be, when we have developments like that, what does it mean for investment in manufacturing? I know, and we all know, that the kind of jobs we need to create, government cannot give it. The private sector, the manufacturing space and private sector players are those that can create these jobs. So what kind of investment are we seeing in Nigeria's manufacturing sector, considering the economic challenges and headwinds that we face at the moment?
Okay, so you will have noticed from our report that manufacturing investments have actually declined by 29.63%, which means that more and more investors are seeing manufacturing as a very risky venture. So a deliberate attempt has to be made to de-risk it. And that is for us to focus on even those that are already producing. If you want to get foreign direct investment into the manufacturing sector, they will always ask those that are existing how they are faring. And if the situation is that they are declaring losses, some of them are leaving the country, and most are becoming wary of investing in Nigeria, it means that you are not going to get it. So I believe that what is needed is for those challenges that we have continued to mention to be centrally addressed by government. I must admit, quite frankly, that President Tinubu has indicated that he's going to promote domestic production. And we have taken him by his words. And there are so many policy initiatives that are in the offing that should lead to that. But we need speed, we need traction, and we need consistency so that we are able to realize the gains and that we don't create the impression that those reforms are counterproductive. Already, people who supported the removal of fuel subsidy, the floating of the naira rate, are becoming worried that they have not seen the gains that they expected to see. So we need more speed, and we need to ensure, we need to guarantee a situation where you can give people confidence to continue to invest in Nigeria. We have seen, in our report, we indicated that the nominal increase that you have seen in terms of investment is only because of the devaluation of the naira, which has tended to give the impression that we have more volumes in terms of investment. But there's need for us to allow all of this to translate. In the real sense of it, this should have been the time that people should be investing in manufacturing so that they'll be able to take advantage of our depreciated currency. But if the operating environment, the cost environment is not conducive, you won't be able to get the advantage. There's hardly any manufacturer, for instance, that will be able to borrow, that will borrow at 30%, 35%, 40%, and be able to produce and make profit. Are you producing cocaine? It's not practicable. So we needed to be able to directly target those success factors, those pain points that will allow the manufacturing sector to, in spite of the operating environment, be able to produce and succeed. I mean, the Trump winning election in the US is beginning to bring joy to domestic producers because they are seeing that they are going to have active protection. There is nobody that will leave the economy in such a way that local production is not helped. And Mr. President has stated times and time again that is going to promote domestic production. So those steps that needed to be taken must be expedited. I mean, so that we continue to get the gains. I'm not sure that we'll be able to build the momentum that President Tinubu has built since he came into power, bold decisions that are taken timely and going on head on and trying to ensure that we run with it. So there's need for speed. There's need for traction. There's need for stakeholders' engagement. There is need for us to see that we tick those boxes that needed to be ticked. Nigeria is one country that is so blessed with resilient people. I mean, we took a tour of Dangote refineries and we saw the massive investment. I mean, this man built the port by himself. He brought in cranes, he built roads to be able to support his business. So you can just wonder why things are difficult for him. We need to intentionally promote manufacturing in Nigeria so that we'll be able to take the bus and help government to create the jobs. President Tinubu wants 1 million jobs. Government ministries, departments, and agencies will never deliver on those jobs. It's only the manufacturing sector that will deliver. So there is need for us to, item by item, remove those challenges, and then we'll see the jobs rolling in. It will be to the credit of the economy, it will be to the credit of the government, and we'll see more people investing in manufacturing. We need to deliberately de-risk that sector so that it becomes attractive to new investors, domestic investors, and the foreign investors will feel safe that their money is safe. We shouldn't promote fly-by-night investors who, at the slightest shake of the net, they fly. I think it is important for us to always gauge what kind of investment we are looking for and ensure that it is the ones that promotes inclusive growth. We should just simply stop exporting jobs and importing poverty.
DG, well said. Before we wrap up this conversation, this report, the concluding part of it, there are some suggestions, and you've started with it already. But let's be specific in some of these suggestions that we have for government. Now, you're talking about decisive and coherent economic reforms to address issues around policy consistency, issue around business environment. Now, we know that the present minister was in charge of PEBEC, and all of that has to do with business enabling environment and all of that. Now, if you are setting an agenda, or if you're looking at what's your outlook, or what's your expectations? Yes, you are major stakeholders, so you must have expectations from this new minister. So it is like a two-in-one question. What sort of reforms are you looking at specifically? And what are you expecting from Dr. Jumoke Oduwole?
Okay, first I must say that it is a welcome development. I believe that Dr. Jumoke Oduwole is in a familiar terrain, and we have been in communication with her on how we need to move the sector. First, she's no stranger to the challenges that we have because she has dealt with the ease of doing business. And what we have always indicated that the ease of doing business is one very important factor. The other one is the cost of doing business. And the danger in all of this is that the cost of doing business can completely erode the gains that you make in ease of doing business. So you find it easy to do business, but you die anyway because of the cost. And I think that Nigeria should be blessed by the experience she's had in that direction. So when she comes, now that she has come in as minister, we believe that she will be able to rally other stakeholders, because the survival of the manufacturing sector or the industrial landscape does not rest solely on one ministry. There has to be an interministerial interface that ensures that wherever those issues are, we have the minister that can reach. And I think she's well exposed. She has worked with so many stakeholders, both in private and in her role in public. And then she's able to understand the pain points. So the expectations for her are very clear. We need to be able to get an intentional set of activities, both in terms of policy consistency, like you have mentioned, both and also in terms of the regulatory environment that has to be made supportive and not working against businesses and being made to be revenue generating agencies. We need to be able to have an environment that supports domestic production, that will not in any way make things difficult for domestic producers. We also need consistency in terms of availability of forex, which we cannot but emphasize. With the floating of the rate, we need to be able to intentionally reduce the cost of sourcing forex for those raw materials and spare parts and machines that are not locally available. And we have indicated that there should be a freeze on the rate at which our import duties are calculated for those raw materials that are not locally available. We need to ensure that. We also need to address the issues of multiplicity of taxes and levies. We have 4 bills that the Presidential Committee on Fiscal Policy and Tax Reform have put before the National Assembly. Honestly, I believe that we need to remove every obstacle that will not allow Mr. President to get those bills passed. To me, one of the greatest reforms of our time, not even in Tinubu's administration, is the boldness of Mr. President to set up in the first place that committee and to be able to take those bills to the National Assembly, because it has the capacity to completely put behind us this incidence of multiplicity of taxes and levies, which are collected by all tiers of government to the detriment of production. So we need to be able to support it. And honestly, without sounding like a politician, I think I want to encourage Nigerians to back Mr. President on this call so that we get those bills passed and in record time, so that we'll be able to have an environment that is just, an environment that allows the poor people to survive, run businesses by small-scale industries so that they can scale and grow and employ people and pay taxes to government, and allow those that have prospered from this economy to pay their fair amount of tax. So I believe that is one reform that I believe Dr. Jumoke Oduwole must put her weight behind. We need to ensure that businesses operate in an environment that is predictable and supportive of production. We need to now start by deliberate policy actions to incentivize productivity, the one that encourages you to invest your money in this economy. Then we need to tackle the issue of insecurity. I mean, I indicated before that 60% of our members in the Northeast have closed shop. The peace we are beginning to see, the relative security we are beginning to see, are making some of them consider coming back. I think we need to intentionally support that process so that those losses they have made will be able to have government support that will enable them to come back to production. Because when you free the environment and those who are employed before are now having to live their lives, what are they going to live on? They cannot continue to stay in IDP camps forever. They will need to come back to production. And that means that it's in our interest to quickly encourage them, support them to be able to restart their production. There is also still this lingering issue of $2.4 billion that is owned by the CBN to manufacturers who have legitimately entered into a contract. They have fulfilled their own side, and now they are subjected to paying interest rate, both in Naira and in dollar, for the loans that they have taken for a transaction that has been fully completed. So I believe that we should continue to appeal that there is a fair assessment of the situation, and that those manufacturers, for no fault of theirs, and that have not been held, that have not committed any offense, are able to have these forwards redeemed so that they can move on with business. Because several of them have completed, the year is gone, it's more than 12, 18 months now, and they continue to have to pay interest on all of this. So I think it's time to completely wind down on this so that we do not go into the next year with this. I know a company, for instance, that the exposure has cost them about between 6 to 7 billion naira. This is unnecessary. And when this thing is resolved, when this whole issue is resolved, they are not going to get compensated for whatever reason. So I think it is important for us to dwell on those low-hanging fruits and be able to resolve them. Of course, we are continuously engaging government, and I must say that we have had platforms where we engage government. There is an understanding on the part of government that urgent things need to be done. So we just need speed. We need focus and presence of mind so that we'll be able to coordinate this process and allow the relief that everyone is looking forward to materialize very quickly.
DG, I must thank you so much for your time. Mr. Segun Ajayi Kadri is the Director General, Manufacturers Association of Nigeria. Thank you for your insights. We appreciate this.
It's always a pleasure, Tolu. Thank you.
Well, interesting conversation there. You must agree with me. And we will be talking markets now. Let's just take a break. And in a minute, we'll come back and we would have Mr. Jamiu Mohammed here to speak to us via Zoom. Don't go away. It's Business Night.
Every major news story is with many perspectives and layered with different levels of impact.
Hello. What time did this happen? We will be right there.
At TVC News, we follow the big and major news, gathering the facts, witnessing the outcome.